Hi, in this lesson, I'll be sharing with you exactly how you can overcome the challenge of failed entry. And I'll be showing you how you can make your entry using the double top and double bottom chart pattern formation. The advantage of this pattern is it works on all trends, either for a reversal or for a continuation trade. So it is suitable for you to take advantage of the market. So all you need to know is your ability to identify the pattern, which I'll be showing in this video how you can identify the pattern and how you can make your entry execution. So basically we have three types of double top or double bottom pattern, which is what is popularly referred to as the M and the W pattern. And I'll be showing you how you can use the Bollinger Band as your advantage in finding this entry. So we have the first pattern, which looks like this. So this is the perfect M pattern, which has equal high. So this is a perfect M pattern. The second one looks like this. In the case of the second one, the first leg is always higher than the second leg. You can have a scenario like this. While the third pattern, the second leg is higher than the first leg. So this is the mystery behind it. Most often in this pattern is a liquidity build, and there is a liquidity sitting at the upside. While in this second pattern, most often is already a change of market movement, whereby this second leg will come down and give you a change of character here, retest the trend line and continue to the downside. Then this third pattern, which you are seeing here, is a liquidity sweep. So the liquidity sitting on this was taken, and in most cases this pattern move this way, take away this liquidity, then break this structural point, and afterward this, whenever this pattern is forming, if you look at your indicator window, you realize the price will be giving you a divergence. So this is exactly how these patterns are formed and how they work. So the opposite is for a W, which is a double bottom. So let's move to the chart and see how exactly we can identify this pattern and how we can trade this pattern. For instance, this is GBP/JPY and price is in an uptrend. So we have price in an uptrend. But now when we look at our 4-hour time frame, price is on a downtrend. Why do I say so? On our 4-hour, price is on a downtrend. Price is below the lower Bollinger Band. And if you look at this previously, price take away this low. Price take away this low. So which means that here now is our lower high, and this point is our lower low. So remember, so our point of interest automatically becomes this zone. So in making this entry, we always still work with our zone. So now we will move to a 1 hour time frame. Based on this 1 hour time frame, we want to find our sell entry, because from our H4, price is in a downtrend and price has pulled back to our zone of order block, our zone of resistance, as the case may be. So when price pulled to that zone, we came to our 1 hour time frame. So if you look at this 1 hour time frame critically, price is around the upper Bollinger Band zone, because this is your upper Bollinger Band and price is around the zone. So whenever this price is around either the upper Bollinger Band, middle Bollinger Band or lower Bollinger Band, it becomes a double confirmation for us. So how do we now find this M and W pattern? Now I'll show you. Price was coming this way and price went up. Then price came down and then price went up again, and now you can see price down. So this is an M chart pattern. You need to train your eye in order to be able to identify this pattern, because it will not look like a perfect textbook example that I have shown you earlier. How do we now trade this pattern? Now on this particular one, if you look carefully, there is a divergence. Look at this. This is not an equal high. So this is a divergence around that zone. Great. So now there is a divergence playing out in that zone. So here is how you can take advantage of it. Remember, the first formation was this leg. So when this first leg formed, price went to the upside, and then afterward there is a bearish engulfing candle that was formed in that formation. So here is the bearish engulfing candle. So when this bearish engulfing candle was formed, you are not going to rush into making an entry. Immediately you have that bearish engulfing candle, it now send a signal to you. So all you need to do is for you to mark your order block as that last candle. So you mark it as your order block, and price has already went there, has returned back. So now that you have marked it as an order block or as a zone, you are now waiting for price to return inside to give you that second leg you are waiting for. And immediately price return inside, you can see what happened. After you mark this zone, now price went inside, price came back. So when price returned inside the second time, you begin to look for your entry confirmation. In this scenario now, we have this bearish pin bar. So this bearish pin bar becomes your first entry confirmation. So if you are an aggressive trader and you want to make an entry, when you saw this bearish engulfing candle at the close of it, you will now make your sell entry and your stop loss is above this high. But if you are not an aggressive trader But if you are not an aggressive trader and you are very conservative when it comes to making entry, all you need to do is for you to be patient and wait for price to close below the blue moving average. So this blue moving average is our moving average 10, exponential moving average 10. And if you look at it, this particular candle closes below it. So from here, you will make your sell entry and your stop loss will be at this high. So, and that is exactly what you are seeing playing out now. And immediately you make this entry, you can pick up your trend line and mark out your reference line this way. So what are we expecting? We are expecting that even if price will pull back, it will retest this and continue to the downside. So this is how we can find entry using this pattern. So this is also applicable on a lower time frame. So you can see this formation on our M15 time frame. So in this M15 time frame, price move to the upside. And what do? We will first of all identify our high. So here, where is our high? This is our previous high. So when price came down from this zone, this is the first leg of the M pattern, and then price came back to the downside. So what we want to see, we want to see the second leg formation. So we'll mark this zone as well as we did on the lower time frame. And look at this point here, give us a bearish engulfing candle. You can see that bearish engulfing candle formation inside of that zone. So here is the bearish engulfing candle formation. So either you make entry with that or you are patient for price to close below your moving average, and then you will make your sell entry, and you can see how that is playing out perfectly. So thank you for watching this video to this time. And on this 15-minute as well, you can see how this pattern is playing out at the upper Bollinger Band pattern. But if you look at your 4-hour time frame, you will realize that price is below the lower Bollinger Band, and it is in your point of interest that you have marked. So which shows us that price pulling to this upper Bollinger Band on a 15-minute is actually at the right place in our zone of point of interest, and then we look for our entry confirmation using the M and W chart pattern. Thank you for watching this video, and please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. And if you are interested in mentorship training course, there is a link in the description of this video that will lead you to the group where you can make inquiry. Thank you, and see you in the subsequent video.